So U.S. markets down today despite some solid earnings reports. For more on this, let's go to Phil Blancato. He's a chief market strategist at Osaic. Thanks for joining us today.
Thank you.
So are you surprised stocks pulling back today, given how resilient they've been to date?
I am a little bit surprised that we're going to end the day. It looks like it's flat here with some of the negative headlines, specifically around ISM manufacturing and services weakening, and some concerns about unemployment. I would have thought we would have had a more difficult day. The headlines around tariffs, around pharmaceuticals, I don't think is received very well. But interestingly, the microchip piece was, I thought, quite fascinating in that a bit of a rally in small caps and not so in large cap tech, telling us that this opportunity in small cap is quite strong. But to me, today's market is emblematic of this every day is a new story or a new headline that has the market somewhat concerned, but not terribly concerned.
Okay, so let's talk about another possible tariff, and that could be on semiconductors, according to Donald Trump. He says within the next week or so, he's going to roll that out. How much of a headwind could it be on the tech sector, which has been performing so well?
Well, it seems like some companies like Nvidia have gotten a free pass when we have these sort of difficult moments. And honestly, I think it's going to be more about international impact, less so domestic impact. But to be quite honest with you, if it's across the board and no one is excluded, then I think it would be significant. I think many of the companies that are focused on AI by using what American chip company that they want, or the opportunity to sell those chips somewhere else in the world, I think will be very impacted. Now, it seems like these announcements are done as a leveraging point and don't ever become reality. So I take them with a grain of salt, and the market is so far as well. But let's see what happens before we jump to a conclusion here.
Why do you think Nvidia gets the pass, as you mentioned?
I think they have a very cozy relationship with the federal government. When you see the opportunity there with the CEO coming in and having extended conversations, being arguably the #1 chip manufacturer in the world, certainly the company has tremendous earnings power, but also in the AI arms race, which the president is dedicated to winning, has a task force around winning it. I don't think that they can restrict too much around Nvidia and what they're doing, simply because it's too essential to what the president wants to accomplish in his agenda. I'm not sure he's right about that, by the way, but I do think it's an interesting angle that they are the one company that's excluded because of what they bring to the market.
Are you advising investors to buy on this dip in the market?
It's incredible, the market's ability to climb this wall of worry. And I say less about this dip. I think it more comes down to earnings outside of the Magnificent Seven are quite good. Beating expectations in here. I really like the small cap sector. I think eventually the Fed's going to cut rates. Now, if they're cutting because inflation's slowing down, it's a win for small caps. If they're cutting because we're getting breakage in the U.S. economy, i.e. the last jobs report, then that might be a different narrative. But I do think you have a scenario where there are many companies outside of Mag 7 that are continuing to put up strong enough earnings that and have better valuations that make for much better opportunities, especially in the mid-cap space.
Do you think that the Federal Reserve will cut the rate in September as a result of those revised job numbers?
So I don't like that the number came out on August 1st, and by that I mean I'm not gonna get caught up in all the nonsense around who got fired and who not. But I do think there was something to be said for. I think there's a lot more revisions to come in that job number. I don't think we're finished yet. So assuming the revisions are to the positive, I'm not convinced the Fed will cut rate. But today's ISM numbers push us to a 99% chance as of now for September. But the governors up until this point have been very resistant in trying to do something along those lines. They haven't wanted to even use 1 month of data to move the needle here. So I don't think they do that. I don't think they use 1 month's data to make a decision. Now, having said that, if by the time we get to the next Fed meeting in September, we're going to get the August data and it continues to be bad, then they will cut.
Okay, so let's get into your stock picks right now. You favor first Intuit. Tell me about that.
I love the merger story here. 110 million clients. I think the acquisition made a ton of sense. But you're also looking at a company that could have over 70% earning potential. You know, these are kind of a sleepy company that everybody uses it without even knowing they're using it sometimes. I love the idea of something that has to be almost a cash register. And for that, they're consistent earnings power. They have very strong debt levels. And the last acquisition makes them a very large company. So I think it's a company you set it, forget it, and enjoy the earnings growth you're getting out of it.
Okay, let's get to your next pick, which is JP Morgan. What do you see forward for JP Morgan?
The trading revenue is quite impressive. So remember, all the banks make money on cash. And albeit the Fed may cut a little bit here, they can make up for it in their cash volumes. And their PE ratio, honestly, is about the same it's been over the last 5 years. So a company who's really grown its revenue, it can act as a safety area for your portfolio if we get into some sort of significant volatility. Remember, September is the worst month of the year, and usually August is almost as bad. So at the time we expect further volatility, you're seeing it some of the last couple of days here. I think it's a bellwether stock you can have in your portfolio that would help you not only grow and be a substantive, solid earnings growth company, not significant, not double digit, but certainly one that would allow you to have a stable part of your portfolio.
Okay, so let's get to your third pick, which is Encino, which is a cloud banking solutions company. Tell me a bit more about that.
Financial service sector AI, and why I like it, and this is for everybody who's listening, this is your play money. I hate to use that word, but it's only a $3 billion company. But 350% earnings growth. This is a company who continues to significantly beat expectations. I think this is what AI looks like in the future, too. It's the first company that does this. Why? A niche player for a niche space. So they're going to developing AI product that fits a particular business model. And why I like that is companies are willing to pay for that. Rather than developing themselves, I need a very specific way to approach my data, my AI use. Encino is one that represents that. Their earnings growth is quite incredible. So if you like that small cap play and you want to have something in your portfolio that takes on a bit of a risk, I think this is a great way to do it.